Good afternoon and welcome to the latest episode of Print21, the weekly video news bulletin for the Australia and New Zealand print industries. Printers were thrown just a few crumbs in Jim Chalmers' election budget, which analysts say did virtually nothing to boost productivity or business growth, or cut red or green tape. Despite Treasurer Chalmers labelling the latest budget as a platform for prosperity, there was no business tax reform that business has been demanding, nothing on energy beyond a minuscule rebate, and the $20,000 instant asset write-off was cut to just $1,000, exactly the opposite of what business wanted, which they wanted a massive increase in that instant asset write-off. There will also be a ban on non-compete clauses in staff contracts if the worker is earning less than $175,000 a year. The ban on non-compete clauses will include ending the restraint on staff swapping jobs to a rival firm and on staff setting up a rival operation. That policy will only apply to new contracts, but adding to the anger businesses will feel over the move, the government said it is also looking at extending the non-compete clause ban to workers on higher incomes and is looking at banning clauses that prevent staff who move to a rival company or set up on their own from taking clients and colleagues from the existing company with them. The government is also aiming to ban agreements between rival companies not to poach each other's staff and to fix wage levels between themselves. The upside of the budget, well, that was very little in terms of benefit to print. The 100,000 fee-free TAFE places will continue, and there's a minor tax cut for workers. That will enable them to buy 1 cup of coffee each week, and that doesn't kick in until next July. Chalmers did give one potentially beneficial change to print with the launch of a $20 million fund to spruik buying in Australia. However, whether the government itself will take its own advice and mandate taxpayer dollars going to buying only Australian print rather than spending the money overseas because it's a bit cheaper, that remains to be seen. In the US, taxpayer dollars have to be spent within the US unless there is no option but to go overseas, with the mandate in place long before the current Trump administration gained power. Print advocates here want the same mandate applied to the Australian government and government-funded bodies. Peak Industry Employers Group, the Visual Media Association, has described the proposed banning of non-compete clauses outlined in that budget as concerning, saying the budget offered little to nothing to assist print. Charles Watson, General Manager, IR, Policy and Governance at the VMA, said the budget does nothing to incentivize a basically flatlining economy to push national growth, productivity and growth. On the controversial non-compete clause banning move, which Treasurer Jim Chalmers said would unlock economic growth, Watson said the budget announcement on banning non-compete clauses in employment contracts for employees earning less than $175,000 per annum was concerning. The proposed ban, he said, is based on the government's view that such contractual clauses suppress wages and competition, and their removal would unlock productivity and add up to $5 billion a year to GDP. Watson said such a regulatory approach will be oppressive on businesses. Leading into this year's budget, the VMA was seeking various measures from Chalmers, including a boost to the current $20,000 instant asset write-off scheme, more widespread efforts to tackle skills and worker shortages, along with broader support for improved educational and training outcomes, business incentivization measures, improvements to the taxation system, challenges faced by businesses, and an appropriately articulated approach to national productivity. Investment continues in print though, even without federal assistance. Hobart business Abel Labels is strengthening its digital printing capabilities with the installation of a new screen TruePress L350 UV inkjet label press supplied by Jet Technologies. According to the company, the strategic investment will enable Abel Labels to deliver high-quality labels with faster turnaround times, meeting the increasing demands of its customers across the state. As the label printing industry continues to shift towards digital technology, the screen TruePress, says Jet, is targeted at medium to longer run jobs. Universal Approach has invested in a third Konica Minolta high-volume cut-sheet digital colour press and a Curio Press C14000 for its fleet, as print volumes grow for the print, mail and 3PL business. The new printer comes as added capacity for the company, which trebled the size of its production facility just last year, with a move into new 1,625 square metre premises in Dandenong South. Sales manager at Universal Approach, Richard King, said, "We're seeing more work come from existing customers, and we're winning new customers. As we experience continued growth and continue to print more work, we wanted to ensure that our turnaround times remain razor sharp. So we invested in the third Konica Minolta. That's it for this week's episode of Play Print21. Go to print21.com.au for all these stories in depth and more. You won't find them anywhere else but on the industry's only print news website. This is Wayne Robinson, editor of Print21, signing off for another week.